Good morning and welcome to the Early Bird. And here we're looking at the S&P 500 and also the Euro as well. As you can see, the Euro in red and the S&P 500 in the bar chart there. You can see that they're moving in harmony together, and that's why we've been talking about them moving in sync, and the US dollar doing the opposite. So we're able to bring the currencies into the stock side of things. And also the other drivers such as oil there as well. Not so much the bonds, but they're in the same play as well. So look, what we're looking for here is we're looking for the rally last night in the S&P 500 to roll over, to finish a wave 4 here and move further down. And we'll see the important level here is 1272. And it would be the same with the Dow Jones as well. So the Dow Jones at 12,100 here. We're looking at this being a rally here. Obviously, it'll be sold off on the close anyway, but the futures and the cash market will come together on the opening. But it would be important today to see if you're trading our local SPY or even stocks themselves. It's important to keep an eye on the Dow futures contracts overnight, as they will pull the market around somewhat. But here the Dow, the 12,000 is the pivot here that we're working with here, and the 11,900 is the support. This is the range we're talking about here. So we're capping the range back in at 12.1 here now. So this will work closer in now to, because it's had its swings, and it will work closer into the 12,000 there. So for any sort of solid move to the downside here, if the Dow here gets trapped under the 12,000 as resistance here, then you can look to short in a sort of stronger way here. This particular move up through here appears corrective in its move. It may not have finished, and we may end up even higher up here, but once it locks back under here the next time around, then we'll be in a position to short it. And this will also show up on the S&P 500. This is the S&P 500 here, the 72 levels, the sort of pivot between here as well. So what we were talking about yesterday and the day before is that the next time after this particular rally comes in through here, the next time it locks under the 72 there, then we can look to short that to the downside there, and we'll be looking for 5 waves down. So we have to wait for that. Sure, you can go earlier than that, but the reality is that when it comes, analysis is one thing and trading is another. In terms of trading, sure, if you've got the 12.8 as a solid resistance there, that's fine, you know. But yeah, otherwise wait for this here. So it's the answer's in the retest, a failed retest there. But that's what we're looking for here. Wave 3, wave 4 here, and wave 5. Remember that the Euro and the S&P 500 will be doing pretty much the same. And yeah, so when we have a look at our markets here, I have to say this is the SPY here, and this is the live contract here. One of the interesting parts here is that the SPY yesterday sort of held its low in play here, and I thought that was interesting because probably doesn't mean much, but I just liked this particular structure in here. I found this to be an impulse wave. An impulse wave gives direction. So if we get 5 waves here, then we'll get a counter trend, and then we'll get another 5 waves. So this holding in play here, remember yesterday on the cash market, this dropped lower from here. So if we looked at the cash market here, we can see that a new low was made from here, where the SPY basically held its position here. That's 5-minute chart. This is a 5-minute chart. So this held its position here. So this 5 waves here I found was important. It seems to be that we may see the futures market leading here a little bit. However, the 4,500, if the futures market, and that's what they call the futures market because it's working in anticipated sort of prices, and it does lead, and you know, if this leads above the 4,500 here, then that would be would be interesting, but then we would also want to see the cash market here, the XJO, also make a move to the upside as well. So what we'll be looking at here, what the important thing here will be today, not only today but in the future, is that this has clearly dropped through here now, so we'll see some sort of struggling sort of retest of the 4,500. If it can find support above the 72 here, the pivot within group 2 here, then we've got a chance of it moving back up through here. There's a couple of different wave counts for this coming down here, but whichever way you look at it, it's quite sort of bearish. So we'll see how we go with a move up through here today. So we'll probably see this sort of come up here, but we're in the bigger picture. We're just looking this as a retest of 4,500. If it fails from here and then moves back down and triggers these ones here after that initial move up and comes back and finds this as support, then we'll be looking at 4,300 down lower. So first of all, let's observe and allow this retest to occur here. There'll be a jump on the price there, but it's what happens within this range here. So we also need to, because the cash market and the futures market have different basic wave counts under this here, because it held its low here, we got different patterns here. So we need to give consideration to that. But once again, first things first, and this is all about the retest here. The SPY won't travel much here. Once the cash market opens, it would have already sort of had its move in. But anyway, there you go. And it's pretty much the same for the FTSE as well. That's the SPY continuation contract. This is the FTSE here. We've got a lot of trend lines coming through here at this point here, but I think it's also important to have a look at the DAX now as well, because the DAX is coming down onto its support here of 7,000, and the 72 would be important here. And this pattern here, what I want to draw attention to is that this pattern here is a corrective pattern because it's got overlapping wave structures, so we should see this move lower once this finds itself under here as resistance. If that's going to be the case, that means coming through here, locking under there, and then rolling over from that point there. That will be a significant point. So this is normal case with the trading levels. Will come down, bounce off it, do its pattern. This pattern appears to be corrective. That means that we'll see another retest of this down through here, a spike down at least. If it does come down through here, which it should do, then we'll see how it locks itself under that. It can certainly come through here, make a new low here, satisfy that being a correction, and a new low here gives it an impulse wave. It can get back over on that then. But anyway, medium term, let's see if the 7,000 becomes the resistance there. Okay, on the driving side of things, we've still got copper above the 400 here, and it'll be 9,000 on the LME, which are both medium levels. The 9 and the 4 are medium levels. They carry a bit of weight and they are support. Nickel is probably one of the weaker ones out of the situations, out of the metals, but we use copper because it's used in most things, and it gives a fair bit of it's just central guideline figure really, and it's also got a relationship with the Australian dollar and our market in general as well. So this would show up here at the 400 here, would show up at on the XMJ, our material sector at 13,000. So look for that there. But another important point here as well is BHP in the US at 90. Now, sort of first glance at the US markets, I haven't got it here with me at the moment. I bring up another chart thing, but the BHP in the US that's come down from 100 down to 90 and just under 90, it does appear that it's had 5 waves down. So if it can get back up above 90 as support, then you've actually got some support in the market. And it's something that we need to look at, especially if the 4,500, when it gets retested, if it regains support again on top of the 4,500, well, then that's a significant supporting point then, and we'd see a rally from that point. So It's just a matter of these markets working themselves into a corner, and we just need to be careful we don't lose money in the process of that. Sure, there's a lot of weak markets out there at the moment, and some of them will rally today. If they rally on lower volume than their previous day's volume, then they will be going up on thin air, and they'll be the ones to short, and just use the robo daily or weekly for that, and line them up with the levels, of course. The oil market's holding itself quite well. We were looking at 5 waves coming down, sitting on 90 there. So this is the actual contract here. It's on a 10-minute chart. So we got this wave 5 down to here, and that should be down here. And we're looking for a bounce, an A and a B and a C wave back up through here. It's sitting very flat here. That normally is a sign of weakness through here. But still, just give it a bit more time, because if it's going to go through, you'll see it, and see how it spiked through here. The retest never locked under there, so that's what you'd be looking for: a move down, a retest back up, and locking there. And then that's once you realise or you notice that it's locked there, then you can place your bets on the table. But being above there, you're just exposed to more risk, and the idea is to get probability on your side when you're trading and gather as many of those as you can, and off you go, and you should be okay. So oil's got support, copper's got support, base metals have got support, and the gold market and the silver market would still be expecting to rally. We're looking for that to occur. We may not get a big rally in the gold market here. It may end up just being stuck to the 5 here, the 1 and the 5. 1's the strongest number, 5's the second strongest number. So, we may not see the 61.8% rally coming 5 waves down, 3 waves back up. We're yet to know, so let's just have just chill out and see what comes on. I mean, this looks like the little ABC rally from here, actually, in terms of this looks like a B wave down here. So an A wave, a B wave, and a C wave back up to here. So it could be just a flat, and it could be just to there. And silver would be the same as well. If we can find silver here as well. Silver's got the same situation in here as well, in terms of its last 5 waves down, in terms of 1, 2, 3, 4, and I know this is complicated here, but commodities tend to extend in the 5th wave 50% of the time, where stock would extend in the 3rd wave here. So in here we've pretty much got this 5th wave occurring into here, probably into here, but I just need to sort of rework all that and have a bit of a look at it. But from this point, 1, 2, 3, 4, 5. So that's the 3rd wave there. That would be the 1 to there. That's part of that. There's still a 5th wave to go there. So there's still a bit. There's still a possible move down here to go. But then we'll see a retest back of the Fibonacci number 34 there. So we just got to be careful down at these levels here. If we've got the extension in the 5th wave here, it does mean that we can also get the extension in this little 5th wave as well, like a just a fractal DNA sort of fingerprint thing, I guess. Yeah, we'll see. Right, currencies, the DXY, the US dollar index. Of course, with this moving down through here, we've got the US dollar, the US indices moving to the upside, and also the euro as well, and so forth. So, right, I've had to rework this a little bit. So we've still got our wave 1 up here, and we've got our A wave down to here, our B wave up to here, and we're looking for a C wave down to here to make wave 2. So we've got wave 1 and 2 here. It could be a running flat or an expanded flat. We'll see if it comes back below here first. But essentially what we'll be doing here is looking for 5 waves to the downside here. So we'll be looking in something of 1, 2, 3, or 4 here and a 5 here. Yes, it can be 5 there already in terms of down for 1 and back for 2, down for 3 and 4 and 5 here. But we'll see how we go here. Let's just allow this to find its low in here first. and then we'll see if it gets, when it gains support on the other side over here. So if there is a little bit more to go down in here, that means there's another little push up in the Australian dollar and also the euro as well. So if we look at the Australian dollar here in the bigger picture here, excuse me for being so messy, but just to point out a couple of basic things here, that the 105 through here has been penetrated, and normally the case is once something comes through, it'll go back and retest the supply levels in here. So that's what we'd be looking for. I thought this was, we were going to get this further up here, but now we've got the 5 waves that we had pinned here have just got extended right down to here now. So there is a larger 5-wave structure from 106 down to the 104 here, and we'd be looking for an A and a B and a C wave back up to here. Now from that high there down to this low here, the 104.72 is the 38% retracement level, which is possible because of the supply in here and so forth. And also when you're talking about corrections as well, this length here for the A wave would have some sort of equality with the C wave that comes in here, which would bring it in around here. If not, the 105 is the 50% retracement level, and the 105.20 in here is the 61 retracement level. So there's plenty of resistance around this sort of level here. Yeah, as you know, that just put this onto a 2-minute chart here and zoom in a little bit further here. You know that if the top of group 1 finds support here, which is the 30, which it certainly appears to be, and also this would be a corrective move through here as well, this being the A wave, the B wave through here, and then the C wave moving up through here. But finding support on 30, the top of group 1, brings in the price of 50. If the midpoint here can find support and would see a sort of a reaction here, and then would see a move up and would see some sort of corrective move across here before we moved up further. But I have to say, when you've got a big basing pattern like this here, then squaring time, if you squared that up there, right, in terms of time, then you should be able to square that in terms of price. So we should see a stronger move up through there, and it may not spend very much time at the midpoint here, simply because of the nice accumulation pattern in here. Richard Wyckoff's work, definitely a good read. Yeah, so you know, the midpoint group 2 here, subgroup 2, 65, 72, and the 80 will cause it there, but good support here will get you to the 72. Same with the euro as well. In terms of the euro here, you've got to kind of imagine this ABC pattern here that we're looking at here, this A, this B, and this C pattern here, the same as the DXY upside down. So you'll see that. So if the DXY has a little bit more to move, like we're mentioning, then we'll see this up here. But you know that the 143 will give a lot of problems here. So you're just going to have to be careful about that, and yeah, just bring in the buy. So any locking under here we'll probably see further downside as well. But just give it some time up here. It's not, it's probably not a good trade up in this sort of area here as such. It's just the 2-minute chart here. You can see that it's working with the 72s, all the levels really well. It's in this 72 here, subgroup 2 here. So, you know, at least it's above the level. Because we're on the close, you know, it gets a bit messy, but it should check in at the top of subgroup 2 here before it retests further up here. Because of this A, B, and C correction here, we should make a new high through here. It's just the facts on close, but what could happen, we need to be aware of, is that this little A, B, C here may be just the A wave. This will be the B wave. We'll get a C wave down back through here and then a push up. Now, if that's the case, if you lose money within here on the open, when, you know, so not so much the open, but you know, when when volume starts moving in, if it does move back down through here and then gets back up here, then you've got your trade, because you know that you've got a larger ABC correction there. So a little bit tricky with corrections because yeah, they're just the weakest point in Elliott, but we know that if it does come back down through here, and then climbs back up onto the 2 there, then you got yourself a trade to the upside there, so keep an eye out for that. Okay, that's really it, really. So we are expecting the S&P 500 to have problems up through here, and just generally speaking, while the S&P 500 is below the 1300 there, then the medium picture is more bearish than positive through there, and any move under the 72 from this point would be a short down, and we'll be looking for 5 waves down down to here to finish off a 5th wave. Once that's complete, then we'll be looking for a push up from there. So yeah, we'll see how we go as it unfolds. Alrighty, good morning and good luck.